my window.
Hello, traders. Gary Wagner with the Gold Forecast here. Second day of May, Monday, approximately 9:30 in Honolulu, Hawaii, and this is the daily report for gold. We do have gold trading off this morning. It is currently trading at 1555 and change, and that puts it off about $8 for the day. We're looking at a 60-minute chart. I want to draw your attention to the kind of activity that we saw as we went into the market. Of course, the 29th, this is the close into Friday right in here. And then when we open on Sunday, you can see that this is a 1-hour candlestick bar. But as you can see, it comes in, it makes this high right in here, and then begins to sell off hardly. The market bottomed at roughly 1540. Began to move up a little bit, consolidated, spiked back up, and again is now trading around 1555. Of course, we entered a trade at 1525. Somewhere in this area right in here is where we entered our trade. Of course, we rode that trade all the way up, and we did pull a small profit. We pulled a profit of roughly $19 when we exited the trade yesterday. So all in all, it was a good trade. We didn't pick up everything that was on the table, but faced with the kind of volatility, the extreme volatility we've seen in the market, last three trades, we've had good solid gains on those trades. So I'm quite pleased with it. So here's the key. First, I want to start by taking a look at our big picture within the marketplace itself. Of course, daily candlesticks, Elliott wave channel lines. Now, the one thing that we're going to do, and this is where we actually get paid for our homework, is we want to have an idea of, let's assume that we are coming to a conclusion of wave 3 here. And that's this long wave right in here. To ascertain that, what we want to do is a couple of things. The first thing that we really need to do is our Fibonacci retracement. And to do that, what I have done is I've created two Fibonacci retracement areas, two sequences, and let me blow this up so I can show you what I'm looking at. And the sequences that you see are a deeper and then a more shallow. Of course, the deeper is starting really from the beginning of this wave 3 to the top, and then our second more shallow retracement, and that's going to be drawn in magenta, and that is simply from this low right in here, which was a secondary low within this long third wave. Now, as you can see, in terms of the larger picture, we certainly haven't even touched upon that 23% level right in here. That would be this line right in here. However, as far as this shallow line goes with our bottom and our top here, this is our 23 at 1542, and you can see that we did get a low that did touch that area. So that although to me, I'm a little bit reluctant for the next couple of days to say that, in fact, we've seen any kind of a retracement. I can't really call this a correction. I can call this a small sell-off within the grander picture. But when we look at that, a real correction, as far as I'm concerned, is going to have to take us probably to a 38% level of our shallow, which would take us at 1523. Of course, we didn't see that. And 50% right in here, which takes us just below, which is just around 1508. We didn't see that either. So have we seen a ultimate wave correction or a wave change? Unlike silver, and I do believe that silver has entered the fourth wave, I am not convinced as of yet that gold has. I still think that there could be some life left in us on this last wave. Now, in terms of our upside projection, though, we are close. We have hit the numbers that we were initially looking for, but realize, traders, that a 1.16% move takes us to about 1592. We've gotten just shy of that. just shy of that when you consider that we've gotten as high as 1577. So I do have to tell you that my belief is that we could see further selling in this market. This wave 3, as far as I'm concerned, has, in terms of distance itself, has gotten us right to that target area. Again, our target was 1.61. That target's around 1592, high roughly less than $20 from there. So that tells me that we are in the area of the top or the end conclusion of our third wave. We have not seen any technical evidence to support that. Therefore, my recommendation is I really want the dust to settle. I think that there could easily be a further shakeout in this market, and I could be wrong, but I believe that there could be a further shakeout in this market. If that's the case, I want to remain on the sidelines and look for a spot to enter the market. If we see the market begin to sell off and we calculate that we are in fact going into this wave 4, we do have target points that we feel are very, very logical target points. First of all, you've got 1523 that I think would be a normal conclusion for this wave. I think that that would be, because that's a 38% retracement, I think that that would be more viable. The other thing is that when we look at this 1530, and this is our 23% retracement off of this much bigger picture, that would indicate to me a correction that actually had the distance that I need to see to believe that it has kind of worked itself out. So in terms of target areas where we think this market might go to, my personal sentiment is if we find support here and the market continues higher, we have not ended the third wave. My gut feeling is that this market will probably meander a little bit lower, and my technical feeling is that we want to look for the market, if in fact it does, in 3 distinct areas. We've already hit this 1542. That's the first low that we've hit, and you can see that that matches up right here. But the market currently is trading well off of that low right here. The other thing to bode for the bull side, so to speak, is that when we take a look, it is above that channel line. And as we talked about yesterday, that channel line is derived from a series of tops, and that is that conclusion of wave 5 on the last phase that we got. And I can simply show you what I mean. And that is when we consider this channel line, you can see where it's touched here and it's just above here. So this upper channel line right in here that we're looking at, which is this one, has some good pedigree behind it. And when I say pedigree, the pedigree that I'm referring to are these series of tops. So it would have to break below there, and that's what I believe that it will do. I also believe that we'll have to see the market go and trade. We do have a little bit of a sell-off going on right now trading down to about 1550, so we'll have to see how that pans out. But we do have basic targets that we believe are logical. As I said, this is our first target, and we'd have to see it on a closing basis. So 1542, 1530, and 1523. If it really sold off hard, you could get a 50% retracement, but really what I'm looking at is 38%, which is 1503. That would be as low as I think logically we could expect that correction to be. And what that would do is that would take our wave 3, would give us our wave 4, and then the beauty is we would then go into that final impulse wave, wave 5, in major 5. And that, traders, is going to be exciting. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange.